Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors. January 8th, just after the close. Strong week across the board. 1.5% to 2% gains in the broad indexes. Small cap, even stronger. Nice bid internationally. You had emerging markets and developed markets really up double the S&P and Qs here. Some of this domestically was right in the face of what we saw down in Washington this week. Market ignored it from a price standpoint, tough to ignore from a citizen standpoint. You know, we look at that political violence raising its head now over the last 12 months. When we look at a bell curve, it may only be the 10% outliers on each side, the extreme left and the extreme right. But they got a lot of media attention and a lot of focus from politicians. Very important for the center to be able to stand strong under this assault from the extreme left and extreme right. We'll see what happens. That can tend to start undermining confidence in markets. Not happening yet. Plenty of liquidity. We saw any little pullbacks met with a bid. Been talking about that throughout the last 6, 8, 10 months. Pullbacks of 2 and 3 and 4% now are met with a steady bid. Last real opportunity at a pullback was back in September when the S&P was down 8, 9%. So we'll see what next week brings. Do have to keep our eyes on interest rates. John Mousseau will be on talking about that rise in yields this week. That's a dramatic rise. Banks benefited. Some of the other areas that are pure interest rate swaps, such as utilities, REITs, things of that nature, we have to see if they start to fold under this higher yield pressure. So have a great weekend, beginning of the year. Stay reasonable. Take a look at risk and reward. See where your capital can be best spent, and we'll be back next week.
Good afternoon, everybody. It's John Mousseau. I am the President, CEO, and Director of Fixed Income here at Cumberland Advisors. It is Friday afternoon, January 8th, on one big week on a lot of different fronts. Bunch of things happened this week. Georgia Senate went Democratic, both races. So that swung the Senate to the Democrats because it is 50-50 with Vice President-elect Kamala Harris now being the deciding vote. So we now have a blue wave with a Democratic White House, House of Representatives, and Senate all in a row. We know the turmoil that happened on Wednesday in the Capitol. You don't need comments from me, it was terrible. But what does it mean to the bond market? Bond yields this week up a lot. Very much consistent with what we've talked about. The idea that you would see a transition from where we were to an expectation of more spending, whether it's in the form of direct aid, whether it's in the form of an infrastructure program, whether it's in the form of more PPP loans. You can expect more stimulus coming. The market takes that and discounts that. So what did we have? We had a 10-year bond yield which moved from 0.92 up to a 110, up 18 ticks. We had a 30-year bond yield which went from a 165 to a 188, up 23 ticks in yield. Very big moves, and that's really with like a 2-year bond hardly moving at all. So the yield curve became steeper. That is an expectation that economic activity will be picking up. It doesn't necessarily mean that inflation picks up, although we think that happens at some point. It does mean, though, that inflation expectations are picking up. And that's just as important to the bond market as outright inflation itself. So we will be watching this. Muni bond yields, hardly up at all, only about 3 or 4 basis points in yield across the board. Why were they so under control versus the Treasury yields, which moved up markedly? It's easy. People are expecting further down the road, not right away, but a tax increase. So municipal bonds will continue to be in demand. We know that if tax rates eventually go up, that the demand goes up so that people are kind of jumping the gun a little bit on that. We do expect municipal supply to rise a decent amount as we go forward. And part of this will now be issuers saying, wow, we see Treasury rates moving up fast. Muni rates haven't moved up that much. Maybe we better accelerate our issuance. So we expect to see a spring, or late winter with a fair amount of issuance coming. And that will be good for us because we're fairly defensively positioned right now, and we want to take advantage of what we think might be a flood of supply. Overall, very good for municipal credit in general because of the aid that municipalities will be getting, and clearly, hopefully, an infrastructure program down the road. Next week, we'll be watching the CPI figures. It'll be very important, and they'll be more important as we go forward because we'll be watching that carefully. So we hope you all have a good week. Certainly a tumultuous week in American politics and American history in general, and we hope you have a good weekend. See you next week.